We are live on the YouTubes. Mojo Mark the Answer Man. I like that. Guys, I'm going to apologize in advance if my voice is a little weird, if I have to take awkward pauses and take big drinks of water. Just got a little congestion going on. Good morning, Cav. Good to see you. Let's check news. What do you say? Today is Tuesday, January 13th. Not nearly as ominous as Friday the 13th. And we had some big news at 8:30. Did you guys see how much the market spiked during that news? Here's the cool thing. I'm not trying to predict it. Don't have to worry about it. Doesn't affect my trading one bit at all, except I choose not to trade when there's high impact news because it can have that reaction, guys. And what we're going to talk about over the next hour or so, and then a little deeper into it, is we're going to talk about patterns. Patterns that you'll be able to prove win more than they lose. And my job is to teach you these patterns, to teach you how to recognize some advantages on your chart, and then you will turn those advantages into trades. Let me bring up the old slideshow, guys. We're going to become chart readers. That's the goal. So if you're telling all your friends, I'm going to be a day trader, I want you to change your language. You're going to be a chart reader that is going to be followed up with, you'll have a minor and professional weighting. We're going to use 3 rules on 2 charts. It doesn't matter whether you are on NinjaTrader or if you are on TradingView, guys. It is very much apples and oranges. There's different concepts on both charts, but 3 rules, 2 charts. So know which one you're looking for. NinjaTrader will come first. Good morning, Miss Trina. It's great to see you today. What we're going to do is we're going to build a foundation. We're going to lay some concrete, guys. We're going to build our trade skyscraper on some very basic fundamentals. You're going to find that chart reading is about 90% of your day. If you were following the conversation this morning, there was a lot of nothing. There was a lot of, hey, this is in the way, that's in the way, this isn't what I need. I'm going to choose to do nothing. 10% of your day will be trading. That's the fun stuff, right? Here's the deal, though. It's easy to get into a trade. All you have to do is push a button. We're going to focus on getting into the right trades. And you're going to understand through your chart reading where the market is likely to continue. And this is going to be your entry point. You're going to understand where the market is likely to go. This is going to help you with profit targets. And you'll understand where the market is likely to stop. We call these termination conditions. A termination condition is going to be an area on your chart that you'll know about long before the market gets to. And you're going to be able to say to yourself, hey, this is an area that could stop the market. This is an area that could end the trend. I choose not to trade, and it's going to keep you in that 90% and that patience piece. The market does the same thing every day. It goes up, there's a little fight, it goes down. This is crude oil. It goes up, there's a little fight, continues up, right? You see a lot of that. It goes down, there's a fight, more down. The market's been doing this for as long as I've been watching the markets. We're going to take that established trend, and you're going to get the rules for the high probability trend trade. When the market fights in an uptrend, when it pushes down, you're going to recognize exactly where that low is most likely to be. This will become your entry for the highest probability trend trade. Let me get my pew pew on there. When the market is trending down, somebody's going to push it up. You're going to pinpoint right where that market is most likely to fail in that push up. This will become your entry for the highest probability trend trade short. So there's 3 things you can do in the market. You can buy, you can sell, or you can wait. Only one of them is difficult, and it's not buying or selling. We're going to break down both platforms, and I'm going to teach you the rules, guys. I'm going to break down each rule individually, the indicators that are used for it. I want you as a brand new user to focus on the rules, to focus on the advantages that come from the rules. Don't put the pressure on yourself to be a successful day trader, not yet. The first day, excuse me, it's like a new language. The second day, some of it sounds familiar. By the third day, you're going to be like, oh, there's those advantages he was talking about. And it's not uncommon to see you guys calling the correct trades, the perfect trades, by the end of 4 or 5 days with me. If you are evaluating the software, your job is to have a little bit of distrust, to say there's no way this could work. And I want you to pay attention to what we look at when we teach. And I want you to pay attention to what people are posting in this room using the software. And you'll see that it does in fact work. Good morning, Danny. Good to see you in here. Boy, you were practicing posting in the room yesterday and you said questions. And man, my ears perked up and I was like, what's your question? And then I realized that you were just testing posting in the room. So you owe me a question, Danny. Good to see you back in here. Guys, you have the ability to simulate, to practice, to be able to focus on these advantages, to practice this methodology, and have zero financial repercussions. That's what simulators for. And what you're doing on simulators, you're not really trading. You're building the muscle memory so that when it's time to be live, your body knows what to do, your brain knows what it's looking for. The hope is that you don't practice the wrong trades. It's fun to win a trade. There's a dopamine kick there, right? If I jump into a market that I shouldn't jump into and make $1,000, my brain doesn't know that I got lucky. My brain will believe that I'm the smartest person in the world. Those short-term victories, those lucky wins, typically turn into long-term failures for the typical trader. We're going to simplify. I'm going to hand you guys a plan. If you are a Ninja Trader, it's the Ninja Trader KISS plan. KISS. Keep it simple, sunshine. HR said I can't call anybody stupid anymore. This plan is a stepping stone in your learning journey, guys. This is the beginning. This is the foundation. This is the starting line. This is kindergarten. It's designed to teach you to read your indicators so that you can recognize the advantages that create the trade. These trades in the plan are designed to optimize your chances of success. Now, believe me when I tell you, nobody in this room is going to stick to this plan 100%. You're going to begin to see things and do things, and you're going to write your own plan, but it's going to be based on your experience reading the indicators. If you are in TradingView, it's the same thing. It's the KISS plan. Let's optimize our chances of success. They say that memory comes from the memory of success, or confidence comes from the memory of success. You've got to learn the pattern, the looks that you're going to commit to, and they're the same every time. When the rules are met, it's going to look the same every time. Long trades are going to look the same. Short trades are going to look the same. So we're really focused on the pattern, the process, not so much the results in the beginning. But you've got to learn those patterns so that they become easy. And that's where the second piece of the puzzle comes in. Post in my room. Show me what you're doing. Let's make sure that you're reading indicators correctly. When you post in the room and you say, hey, check it out, Mark. Price reversed at the red fibs. Everything is down. The market is strong. I just jumped the fudge in and made some money. And I'm going to say, that's awesome, Cav. Way to go. Did you see the big blue line in front of you that created a bounce? And Cav's going to say, of course I did. But I noticed that the buyers tried and failed, and I got in when they failed. So I was able to make a little money on the way down, and it revolves around momentum, the first rule. Cav, a little risky hopping in directly into fibs, but I am glad that it worked out for you. And that's the feedback you'll get. Hey, I see your chart read. You told me what you saw. This is what I saw. If there's a way to do it better, let's talk about it. And maybe getting in on the other side of that Fibonacci area makes more sense long-term for long-term success. But every time you post in the room, it's a private session. I'm not the trade police. I don't want to be the trade police. And if you track your progress in the spreadsheet, so here is the Ninja Trader one, since we're starting there. Your first tab is what it looks like to have the rules met individually, because we're going to piece these together to create a trade. There's about 500 pictures of Nexgen users posting in this room, trend trades, whether they are high or medium probability, but that's your pattern. Commit it to memory. Repetition creates recognition. There's a place for you to put your pictures. When you take a trade, and it's the perfect trade, and we virtually high five, and there's a gold star sent to you via FedEx, you're going to take that picture, and you're going to drop it in here. So as you study the patterns, you're going to be like, wow, Mark said, don't miss this one. It's perfect. That's my pattern. That's what I'm looking for. And what you'll find is that the patterns get easier and easier the more pictures you take. And then finally, there's a trade tracking sheet. And this is one of the coolest tools that I think is underused. This trade tracking sheet's nothing more than a place for you to put the pictures that you take of your trades. You're going to write on your screen, on your chart, this is what I saw, this is what I did, this is why I did it. And when you post it in the room, our private session is going to give you some level of feedback, right? That feedback might be, Cav, it's cool. I'm glad you won. I'm smiling. But waiting to get to the other side of the fib can keep you out of that reaction. It gets you to the other side of the reaction. And what you'll find is it may be an easier trade. And Cav's going to go to a spreadsheet and say, all right, what was the feedback in class? Don't trade into bouncy things. Eyes open. Right? And I'm not telling Cav not to take the trade, but I'm saying, Cav, with everything you did, that's the one thing I saw that could have ruined that trade. Maybe you would just want to stay aware. And Cav's like, that's awesome. I love feedback. That's why I'm in the room. Thanks, Mark. And we're going to high five and have a good time. So the path has been the same for as long as I've been doing this. Learn the rules. Practice, 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 practice. Get feedback on everything you do. And start tracking, guys. Start taking pictures. The more pictures you take, the more times you annotate a picture, the faster you're going to get to where you want to be. As advertised, only 3 rules. This is the high probability trend trade. This is on NinjaTrader. This is the best of the best. This is the one that's going to teach you to recognize advantages. Ultimately, you'll find a lot of ways to get paid with those advantages, but this one keeps you in a trade that typically wins 70 to 80% of the time when you follow the rules. It is boring as all get out waiting for this trade. So on the plan that I give you, there's a second trend trade that revolves around your understanding of the first. So let's do the easy stuff first, guys. When a rule is true, it shows you an advantage that is in play. So rule number 1, strong triggers, gives me the advantage of momentum. So every time you see strong triggers on your large chart, you're going to say to yourself, this is a market that's going to be difficult to stop in this established trend. And then you're going to say there's no termination conditions. Rule number 2 is true. There's room to profit targets. And that's what we call a clear path. Momentum and path. This is your core. Excuse me. So before you ever look for an entry, you're going to say, your dog is going to learn to day trade because you're going to say this out loud. I have a market that's going to be really tough to stop. And there is nothing in their way to create a bounce. Holy smokes, I can't wait to go define an entry. And your entry area is that likely to continue spot where that fight, that little retracement is most likely to fail. So these 3 rules, these 3 advantages come from only 2 charts. There is a big chart and there is a small chart. That's really all you need to know about the size. The big chart is a very slow moving chart. It's a broad stroke of a brush. It's difficult to see change on this chart. And this is where it takes 1 bar, the most current bar. You'll be able to find direction through the background color. It's either green or red, up or down. You'll be able to define momentum, looking for strong triggers. You'll be able to define areas that could be problematic. All of this comes from the most current printing bar. And when it's time to look for an entry, when the rules are met, 1 and 2, that fight can be seen on a smaller, faster chart. You're going to see a push up. There's the fight. You're going to be able to define where the fight is most likely to be lost. And if this is a part of that 70 to 80%, you're going to see the market continue in the direction of everything the large chart said was going on. All of this happens in that bar. By using the refinement chart, you'll be able to pinpoint where the market is most likely to continue, having the least amount of risk and the highest profit potential. We use these 2 charts because you're not in charge. I want you to be in charge. I wish you were in charge, but you're not. Neither am I. There's a large crowd. Some people call them big business. Some people refer to them as the 1%, institutional traders, whatever you call them. I call them the large crowd. And the large crowd defines the trend. They wake up, they have their coffee, and they say the market's going up today. And then the large crowd says, you know what? I love this trend. What do you say we create some momentum and really push it strong? And then the large crowd says even more. I see that line in the way. Next-gen software is unbelievable. Let's react at that line. And guys, the large crowd wins more often than they don't. Your small chart is the small crowd. And the small crowd creates the fight. Goes against the large crowd. I like to refer them as the ne'er-do-wellers. Your entry rules are going to show you right where the small crowd is most likely to fail. This is how you get into the highest probability trend trade ever. Ron says Norbert. This is Norbert in case you need a different visual. Apex predators are the people who control the market. It will never be you. But if you take the role of a remora, not a bottom feeder, but an opportunist, when this fella or lady, I believe it's a lady because of those fins, gets a tuna, you don't go hungry. When she decides to go one way fast, you go fast with her. If she's not willing to drive into a wall, swim into a wall, you shouldn't be either. Be the remora, guys. Don't fight the large crowd. Life is easier. We're going to use areas to define entries, to define terminations, guys. Areas have names. Here's my technical analysis on areas. Areas are horizontal lines on a chart that can create a bounce. That's it. They're bouncy lines. They can be a divergence high, which means there was a loss of momentum at this high pivot. You'll see it as a magenta line. Divergence lows, same thing from a low, cyan line. Fibonacci resistance is a red line that'll run across the chart. You'll see it long before you get there. In an uptrend, this is where the large crowd may make decisions on that big chart. Fibonacci support does it in a downtrend. Yellow 1-to-1s, these can be support or resistance depending on which way the market is moving. We're going to use areas to define terminations as well as entries. But trigger lines are going to do 90% of the lifting, guys. There's 2 trigger lines. Well, there's actually 4. But 2 solid lines, that's your small triggers. These are the faster of the 2. It's a fast-moving average. The dashed lines, hey, what's up, Sergio? Good to see ya. The dashed lines, these are your large triggers. These are a slow-moving average. Your trigger lines will work together. They will define momentum for rule number 1. They will define termination conditions, making sure you have a clear path for rule number 2. And we will even use the large triggers to pinpoint right where that fight is most likely to be lost for your entry rules on rule number 3. All you need to know is small and large. Pretty cool, right? For those of you that don't know me, I am very, very right-brained. I make up stories about what the market is thinking. I try to paint a picture with it. I am not a technical guy, not at all. Failed college algebra 4 times. English lit major. So we really do this from a place of let's keep it as simple as possible and let's break down the rules one at a time. And let's learn how to recognize a trade through 3 advantages rather than a trade because we think the market is going to do something, because we hope the market is going to do something, because I need to pay rent, I need a new Ferrari, right? We're just going to let a trade, the perfect trade, be momentum plus clear path plus entry. Rule number 1, large chart needs strong trigger lines. This is your entire lesson on rule number 1. So rule number 1, well, really to take a trend trade, one has to trade with the trend, right? So let's define the trend. If the background is green, the market is going up, I choose to only look for high probability trend trades long. If the background is red, the trend is down. I choose to only look for high probability trend trades short. Now there's a very specific look that lets you know you have strong trigger lines. In an uptrend, The small triggers must also be green, but they have to break away from the large triggers, which are also green. So the colors have to match. And it looks a lot to me, and again, I'm kind of artsy-fartsy, like scissors. And when scissors are open, you have strong triggers. So in a downtrend, when the small triggers break below the large triggers, when the large triggers are wide, and your scissors are open, that space is created between small and large triggers. This lets me know my favorite phrase in all of trading. The odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is something that you'll see annotated on charts a lot, OFM. And what it means is that the separation is there, the strength is there, and the market is going to be very difficult to stop with this particular trigger look. And this trigger look happens on the most current bar. So here's your in the moment lesson. Small triggers below the large triggers. Large triggers are wide. Guys, this is strong triggers in the moment in the market. Now, the greatest thing you could ever do for yourself is go take the same picture, draw an arrow. That arrow says, hey brain, this is what you see. And then I want you to describe it through annotation. Smalls below the large. Colors match. Space between. Well, yeah, I can see that just like you can, but what does it mean to you? Odds favorable momentum. Strong. Rule 1 met. Rule 21 met. Rule 1 met. And if you go through this process 10 times, I'm going to go take 10 pictures of strong triggers. You could take it there. You could take it there, right? You couldn't take it there because the colors don't match. Know the difference between strength and weakness. And weakness comes when the small triggers return inside of the large triggers, when the scissors close. And when I have weakness, the market could still rail in the direction of the trend for the next 17 years. But the reality is, it's less likely. When I have weak triggers, anything can happen up or down. So again, language nerd, strong, I like it, feels good. Weak, why am I putting my money in this market? Odds favorable to continue in the direction of the trend. Holy crap, this is telling me something. Anything can happen up or down. Again, where are you going to risk your shiny nickel? I hope it's on strength with the potential to go. So that's rule 1. It's a one picture lesson, guys. Are there any questions? Should we look? Excuse me, I'm so sorry. Should we look at a couple markets? There it is, odds favorable momentum down. There it is, odds favorable momentum up. Holy smokes, that is so easy. See that little tail? That bad boy was a fight. You're going to learn how to predict where the top of that tail is most likely to form. But here's the most important thing. Strength is easy, right? In order to follow your rules, you have to know what it looks like for your rules not to be met. So let's get clever again. No space. Close scissors. Weak. Anything can happen. Rule 1, not met. Does that make sense? I hope so. I guess I'm just doing this for the video. That's cool. Once you guys have momentum, it's okay to go look for rule number 2. It's like a flow chart. So I have a market that's going to be difficult to stop. Now, I have to make sure that there's nothing in the way. A termination condition. A termination condition, for the lack of a better term, will be a horizontal line on your large chart. This is where the large crowd is most likely to make decisions. This is where reversals very often come from. This is where fights between buyers and sellers take place. These are also areas that can break. You'll never know what the reaction is going to be at that area. You can take an educated guess with this little recipe right here. Let price reach the line. What does that mean? That means your dynamic Renko bars in an uptrend are continuing up and they hit their head on resistance. Your price bars are pushing down and they bottom out. They hit support. When price reaches an area, that's what sets off the decision-making process from the people in charge. And again, you'll never know what the reaction is going to be. So I'm going to give you a very simple recipe to know whether that area is likely to stop the market. It's a termination condition. It means that all 4 trigger lines have remained below resistance when price got there. All 4 trigger lines have remained above support when price arrived. Price reaches, we're done with price. Where are my triggers? If they all stay below resistance, absolutely no trades into the area. Price reaches support, I am done with price. Trigger lines above, rule number 2 not met, absolutely no trades into the area. And I know you're like, man, that can't be it. That can't be what stops a market, right? But resistance does a pretty good job. And support does a good job. And resistance to support to resistance to support, what a great way to stay out of consolidation. Weak triggers at support, giant retracement. Over and over, guys, you're going to see how this market loves to bounce. You're going to see how the market reacts to these key areas. Learn the recipe. So if the market doesn't reverse, if the market doesn't just go into a tailspin, that means that it's probably breaking. Areas break all the time. This is what it looks like when an area breaks. Again, price reaches the area, we are done with price. I don't care if it's peeking through. I don't care if it's breaking through. I don't care if it's gotten through. I do care. I'm a caring kind of guy. But if price reaches an area, I go straight to my triggers to tell the story. And if 1, 2, 3, 4 trigger lines are still above support, support is a termination condition, guys. Every line you reach will be a termination condition, at least for a moment. If you're already in a trade, you may see if it breaks with all that momentum. But if you are not in the market yet, your job is to sit on your hands, to wait for the reaction, to say to yourself, I don't know what's going to happen here. And rather than try to guess, I choose to do nothing. And what you're going to find is that rule number 2 became a rule because 60% of the time it works every time to stop you out of a trade, guys. You will take more losses, most likely, trading in determinations than you will not. If it's really going to break, the trigger lines will tell the story. If 2 of your trigger lines, 50% of those trigger lines, get below the area of support, get above the area of resistance, but 50% of your trigger lines haven't gotten through yet, as long as you have momentum, this area has the potential to break. Trades can still be taken. You'll have to manage them assertively. This is the second trade on the plan that I gave you guys, that I'm giving you guys. And it comes from a termination, and it requires momentum, so you've got to learn that in the high probability trend trade. You've got to know that it's not a termination, that 3 of the 4 trigger lines are through, and you've got to be able to find entry, guys. This is the second trade. This will probably be the majority of your trades. But because it's not perfect yet, we're just going to manage assertively. When all 4 trigger lines get below support, support is now broken. And when support breaks, it becomes resistance. Sounds like Yogi Berra. Who's a Yogi Berra, Grandpa? Is that the cartoon with Boo Boo? Guys, support becomes resistance. Your path is clear. Life is good. There's nothing in the way. And it stays that way until you reach the next line. And once you get to the next line, dag nabbit, we're counting triggers again. We're waiting for the reaction. So this is your cheat sheet. And guys, I'll tell you what, I'll go ahead and put this PowerPoint in the room so you have all these pictures. Download it, study it, take pictures, ask questions. I'll go ahead and put the plans in the room too while I'm thinking about it so I don't forget. Plans and spreadsheets. dropped in the room. So down here, we color-coded the likelihood of success if you choose to break the rule. If price reaches resistance and no triggers get through, that's a termination condition. No trades into that area. It's a stop sign red. If only 2 triggers break through that area, while it does have the potential to break, this is not your best look. So in the KISS plan, it's still a no trade scenario. If 3 of the 4 trigger lines break through the area, now we're in that position where the breakout is more imminent. This is where the KISS plan gives you an opportunity to try to capitalize on that potential to break. But the path is not clear until all 4 triggers get through the area in question. And then once they get through, the path remains clear until you smack into the next line, and then you're going to pause for a minute. Is everybody good with that? Can you give me a Y if that makes sense? Texas X, Danny, how we doing? Saying the same thing as yesterday, hoping it starts to click a little bit. There will be times, there will be days, awesome, thank you for that, where your path just isn't clear. You're going to reach a line and you're going to wait for those triggers, and you're going to reach the next line. You'll be like, shoot, dang. And you're going to wait for those triggers. You're going to reach the next line. You'll be like, son of a bumpus hound, I can't believe it. Guys, this is 90% of your day. True story. You are professional waiters 90% of your day. But be patient. The futures markets typically trade collectively about $220 billion hourly. The S&P typically exchanges $174 million a day. It takes $400 a day to put yourself in a 6-figure trading income. We're not looking for every move. We don't have to be the first one in. We don't have to be the last one out. Let's find a way to pull $400 to $500 out of the market consistently. And there's no doubt in my mind, if you keep it focused on the best of the best, it's really not a very difficult task. So, large chart, the big chart, the slow chart, the large crowd has already provided us both momentum and a clear path. So what we're going to do is we're going to go find the fight on the small crowd. On your large chart, that fight looks like a tail. That's too hard to pinpoint where that thing's going to show up. So what we do, because let's be honest, we're pretty darn smart, we're going to go to the smaller chart, to the faster chart. And you guys will pinpoint exactly where that tail is most likely to form, exactly where the market is most likely to continue down with the large chart advantages. Pretty cool, right? That happened, what, not even an hour ago? And guys, your entry rules are super specific. Again, I'm going back to language. Learn this phrase. You'll never wonder where your entry comes from. Learn this phrase, you will call your shot before the market ever gets there. You will use a limit order because you're so dang smart, you're going to wait for the market to come to you. You're going to use that limit order to buy or sell a pullback. That's that little fight against the large chart trend. It's going to start with a reversal bar. And you're going to buy or sell that pullback in an area, at a fib, at a yellow 1-to-1, at a mid band. Why? Because areas are bouncy, right? And we want the market to bounce back in the direction of the large chart. But that area has to be inside of triggers, because large triggers on your small chart will show you where the area needs to be. It'll literally give you a range. So if the large chart is up, let's draw some arrows, right? If the large chart is in an uptrend, if the large chart has strong triggers, if the large chart has a clear path, or at least that potential to break, you're going to turn your eyes to the small chart. And it's probably going to be trading somewhere right here. And right here, you're going to sad face it. You're going to be like, oh my gosh, the market's going without me. I'm probably never going to get paid. I don't know what I'm going to do. Maybe I'll just jump into the market. Guys, study the pattern. You'll trust the pattern. Very often, a reversal bar prints right on that small chart. This is not a reversal of the market. This is the beginning of the fight, but it's not your entry. You'll be able to know exactly where the market is most likely to retrace. using the large triggers on the small chart. And there's two. There's the large triggers that are smooth and the large triggers that are stepped. One's not more important than the other. Price returns to large triggers. Large triggers define where the retracement is most likely to go. But large triggers aren't bouncy. Areas are. So in that area below the top of the large triggers, above the bottom of the large triggers, you're going to look for lines. Fibs, midbands, or yellow one-to-ones. Those lines are where the market is most likely to bounce and continue in the direction of the trend. But here's the deal. I don't know if it's going to be the top line or the bottom line. So it creates this little window of opportunity. Your job will be to activate a limit order above whatever line is closest to the reversal bar, because your large chart is flying up and there's nothing in the way, and we're not going to trip over a couple pennies to save a few dollars. That's your high probability trend trade entry. Now here's one of the things that you have to know. The market may retrace all the way to the bottom of those triggers, and guess what? As long as it's above them, you're still in the good graces of rule number 3. The market may bounce from the highest point. That's where you're going to enter. But if you enter the trade and it pushes lower and hits the one-to-ones, who cares? Rule number 3 is still in play. If it gets to the bottom of the retracement zone, it's okay. Rule number 3 is still in play. Rule number 3 is off the table about 4 or 5 ticks below those triggers, because now the market has made its way through everything good, everything that you hold dear. That's where initial stops are placed. You have defined right where the market is most likely to continue, and in doing so, you have defined where the market should not go if this is going to be one of those 70 to 80%. In the KISS plan, absolutely no trades are taken from lines beyond the triggers. Why? Because once I get through the advantage of rule number 3, I don't know if, when, or where that market may continue up. In a downtrend, when the large chart says down, when the large chart has momentum, when the large chart path is clear, your job is to wait for the reversal bar on the small chart. And guys, you will know where your entry comes from before the reversal bar ever prints, because in your mind, or hopefully out loud, you're saying, all I have to do is sell a pullback at an area inside of triggers. Triggers define the retracement zone. Areas inside that range define the bounce point. Areas beyond the triggers, where the market should not go, that's where we're going to place a stop, because once you get beyond those triggers, you simply don't know if, when, or where the market is going to go down. So here we go. You guys ready? Everything's better with sound effects. All right, this is for Texas and Danny. This is for my new kids. I want to show you how language defines entry. Everything begins on the large chart. Do you guys see? And we'll be trading right about there. Let me match up the numbers. There we go. Smalls below the large, large or wide, space between. Rule number 1 is met, guys. Give me a Y in the room if you see that this is a market that has the advantage of momentum. This is what it's going to look like in a live market. Price has not reached trouble. All of my triggers are below the previous trouble. I have a clear path. Midband is not a factor in this one because those large triggers have to be a full bar away. Because my rules are met on the large chart, I'm going to turn my attention to the small chart. Now, guys, there is no reversal bar yet. But because I understand that trades come from areas inside of triggers, I already know where the market is most likely to retrace. I already know where the market is most likely to bounce. I already know where to activate my limit order and wait for the small crowd to fight. And there's my reversal bar. Look at how far down the mid-band has gone. I got to chase it. But look at this. The fibs are no longer in the equation. I've got one line inside of triggers where the market is most likely to bounce and continue down. Bop, 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 bop. Whoop. Mid-band comes down a little more. I'm not going to sit on my order. I'm going to drop it. I don't want to miss this trade. I'm going to go about 2 ticks below that mid-band. There's my entry. I'm in the trade. Where shouldn't the market go? Right about there. Stop is in place. Now the hardest thing I'll ever do. Do I trust that odds favorable momentum and absolutely nothing in the way is enough to push the market to the next key Fibonacci area? Well, they're running me over. If I'm brand new, I probably don't. But I'm still in the retracement zone. I'm still below areas. I'm still in the good graces of the market. And now it goes down, and then it goes up, and then it goes down. Whew. Da. Fibonacci support. This is your high probability trend trade. That's the trade that typically wins more than it loses. That is the one pattern that you need to recognize so you're not trading in determination conditions. The one pattern you need to recognize so you make sure that you have momentum. And it looks the same every time, guys. Momentum, potential to break, not trading tails, trading pullbacks to areas inside of triggers from the beginning of November this year. All the momentum, potential to break, pull back to an area inside of triggers from 2021. All the momentum, potential to break, pull back to an area inside of triggers from 2022. All the momentum, clear path, pull back to the area inside of triggers. I'm not just a member of the Hair Club for Men, guys. I'm also the president. I trade the exact same plan that I teach each and every day. I teach the exact same pattern that I trade in my daily trading. It doesn't have to be difficult. Are there any questions about the high probability trend trade? That's Ninja Trader. Let's go Trading View. Trading View is a little different. Trading View only has 3 rules for the trade. Oh, no, wait. That's the same, right? Only 3 rules? Well, it only happens on 2 charts. Shoot, that's the same too. Okay, well, we're going to let the large chart define direction, momentum, key targets, and termination. Okay, so it's the same here. Large crowd wins. Large crowd dictates which way we're going, where we're going. But this is a 15-minute chart, guys, and there is so much that can happen in 15 minutes. So we're going to use the 1-minute chart to define our entries. The immediate strength of the market, where we will buy or sell a pullback right at an area. Guys, the plans are so similar. And this trend trade that I'm about to teach you right now, in this moment, today, is the exact same trend trade that Nexgen was teaching in 2004. Let that rattle around for a second. In 2004, Nexgen was teaching a pullback to an area with a close below to trade with the prevailing trend, guys. For nearly 30 years, we've been consistent in methodology. I'm going to take you down a little bit of that old stuff. So your 15-minute chart is so slow that I've pulled the large triggers off of it. And the 15-minute chart is so slow that I've taken the background colors off of it, guys. You're going to see small triggers. That's it, just small triggers. If they're cyan, they're up. If they're white, they're down. But let's be really honest for a second, guys. If these were bright pink, they would still be up. And if they were neon green, they would still be down. It's just up and down. On your small chart, you're going to have small and large triggers. These are your immediate momentum. You'll use the large triggers really only for a momentum style trade in the beginning. The small triggers are the ones that I'm paying attention to, making sure that I don't fight. And then you'll have areas. Areas are bouncy. Have I mentioned that? So this list tells you what the area is and how it can be used. I would encourage you to learn this list. Areas that can stop the market, areas that say no more trades, areas that can be used for entries. And then we're just going to go through the 3 rules. You can't take a trend trade if you're not trading with the trend. It's impossible. So we're going to define trend first, guys. And then we're going to go through each rule individually. So after you define trend, rule number 1 says don't trade into areas. Have a clear path. Rule number 2 says seriously, even on the small chart, don't trade into areas. Have a clear path. Recurring theme. Rule number 3 says buy or sell a pullback in an area because areas are bouncy. But there's a little trick on TradingView because of the size of the bars. We're going to get in with a close on the weak side of the triggers, and I'm going to show you exactly what that looks like. But first, trend. Up or down? Well, my small triggers are up. The trend is up. If my small triggers are down, the trend is down. It's a pretty easy lesson. Guys, are those triggers up or are they down? What do you think? So easy a caveman can do it, right? We're in an uptrend, guys. But rule number 2, once you define the trend, thank you, Rob. Good to see you, bud. You have to make sure that there's room to targets. You can't be trading directly into an area, which means that with this uptrend, from wherever price is, I have to have room before I hit something. And in this case, I do right up until price goes down. So it's going to change throughout the day, guys. Making sure you have distance to get paid, room to profit targets, not trading directly into something that could stop the market. On your 1 minute, it's the same thing. When I take my area or when I take my entry, I can't trade into a wall. I've just got to make sure I've got room to make money. And everybody's got a different idea of how much is enough. My personal trading plan is I have to have a minimum of $100 profit potential from the point of entry. If I don't have it, I choose to sit on the sidelines. If your reactions are not as fast as mine, giving yourself a little more room typically works out. Why do you need to learn TradingView? I mean, I'm happy to teach it. You've put so much time into NinjaTrader. I guess if you want to be in the funding company, absolutely. You don't have to. This is just the second half of class, Rob. The first half was 100% NinjaTrader. You've been gone a while. You could do either. We still have tons of people that trade NinjaTrader. I trade NinjaTrader every day. Just apples and oranges, man. This is your entry. This is always your entry. This is your pattern for entry. This pattern is the same whether it's up or down. Buy or sell a pullback at an area. But I'm going to give you the little keys to the kingdom. So in this case, the large chart is going up. That's your prevailing trend. When I define that the large chart is up, I make sure that the large chart's not trading in anything. I've got direction and path. My rules say, wait for the fight. Well, what's the fight? The fight is a little pullback to an area. You'll know that the fight is on because the small triggers will turn against the large chart trend. So the small triggers will go from up to down, or the small triggers will go from down to up if you're looking for a short. This is just a little fight. It doesn't change the trend. Your entry will be the same every time. Have you guys noticed that I keep saying it's the same? It's a pattern. Learn the pattern. It's not going to change on you. Your entry for a long trade, when you reach the area, is not to jump in at the area, but rather wait for an up bar because we want to go up. And on that up bar, wait for both corners right there. Both corners of that bar must finish above the small triggers. That's the weak side of the small triggers. So there's going to be a pullback to an area. I need to unzoom. And when I get to the area, it's a reversal bar up that closes on the correct side of the triggers, the weak side of the triggers. And no matter what direction you're going, it's the same pattern. If the smalls are up, the market's going up. If you're taking a trend trade, you have to go up with it. If there's room to targets, you've got room to make money. What a wonderful feeling. You know the fight is on because the small triggers have rolled. And guys, you're going to know about your trade all the way up here. You're just not going to have rules met yet. When these small triggers roll, or even before they do, you'll call your shots. You'll say, price has to pull back to an area. There's my area that's lower. That's where the fight's got to go. And when it gets there, you're not just jumping in, because these small triggers win fights. As long as you're left to those triggers, the market's more likely to go up. As long as I'm left to those triggers, the market is more likely to go up. So we let the price finish on the correct side, on the weak side. That's where the small chart is most likely to reverse into the direction of the large chart advantages. Does that make sense, everybody? First, it's direction. Does everybody see that the small triggers are down? That's it. Doesn't take price bars, doesn't take areas. They're either up or down. Those are down. I do have room to trouble. There's nothing to hit until all the way down here. A lot more happening on a 1-minute chart, guys. The market's down here, and I can't wait for a short. Small triggers roll up, which is the opposite of the trend. I draw a box, get to an area. Come on, come get me. When they get there, I'm not just jumping in. I need a down bar that finishes on the correct side of the small triggers. I have to make sure that I have room to trouble from that entry spot. If this is a down bar and it trades directly into trouble, that's not my trade. I need room to targets. Guys, it's the same pattern every time. Once again, I am not just the president. I'll show you what it looks like from a trade taken this morning. I'll even show you how I annotated the charts. The triggers are down. I'm only looking for shorts. I have room to targets. There's my pullback. And guys, I actually had rules met here and they ran my butt straight over. And then they said, Mark, we just wanted you to get in at a better spot. We wanted you in higher. There's my close below. I was a little late on my reaction time. And guys, that's your trend trade. That's from this morning as well. These are patterns that repeat themselves. The next trade is always coming. You'll also know how to manage these trades before you ever enter. The same way you'll know exactly where your stop goes on NinjaTrader, you'll know exactly how aggressive you need to be with management before the trade is ever entered. And you're going to do it by looking at your large chart. And when it's time to take a trade, you're just going to say, where is the most current price in relationship to those small triggers? And there's 3 options. It's going to be left of the triggers, it's going to be right of the triggers, or it's going to be inside of the triggers. If you are left of the triggers, that is the strong side of the triggers. And from the strong side of the triggers, the market is more likely to push in whatever direction it's going. One of the biggest reasons we don't just trade areas, because if I'm left of those triggers, I'm likely to get run over. That's the strong side. That's where 1-minute areas are more likely to break. That's where bigger moves typically come from. If I'm on the right side of the triggers, and guys, whether it's up or down, it's left, right, or center. If I'm on the right side of the triggers, I'm on the weak side of the triggers. It doesn't mean it's a bad trade. It doesn't mean it's less likely to win. It just means 1-minute areas are more likely to bounce. But since I'm insisting on having room to trading to those areas, I should have room to make some money. This is where you may just get paid at trouble and GTFO. Get out of the trade, you're done. If you're inside, this is kind of your medium probability management. You can go from weak to transition to strong all in one bar. So if you're inside of the triggers, transition, you might get paid at the first sign of trouble. We're here to get paid. It's never a bad thing to get some money, but you may just go break even, try to hold for a bigger move. See if that area wants to break. If it doesn't, no harm done. You're good. Let's wait for the next trade. Learn this list. You'll know exactly how to manage your trades before you ever get in. And that's the S&P. That looks like momentum, and it didn't quite reach Fibonacci support, and it pulled right back to a mid-band inside of triggers. While we were talking about TradingView, they gave you another trade. Pretty cool, right? Guys, this is what we do every day. Let's take a couple advantages. And watch this. Here's the opposite. I'm showing you how rules are met to get you into trades. No separation. Those are weak triggers. Rule number 1's not met. There is a clear path. Pretty stoked about that. 50% of my advantages. There is no area inside of triggers. 2 out of 3 of the good things are missing, guys. If I hope a mid-band holds, I lost. If I hope a yellow 1-to-1 holds, I lost. They're not inside of the retracement zone, guys. This is how rules are going to keep you out of trades that you shouldn't be in anyway. These are how rules are going to help you not trade into areas that could stop the market. Look at this. When resistance breaks, they come right back and test it as support. Everything that we do is patterns. Everything that we do is repeatable. Everything that we do is testable. So over the last hour, I've done a couple things. This is how we're going to go into break. I've given you rules. Whether it is NinjaTrader or TradingView, I've given you rules and I've handed you a plan. And that plan is designed to optimize your chances of success. Excuse me, I'm so sorry. That plan is not the end of the line. That plan is the beginning of your future as a day trader, learning to read your indicators. Everybody in the room has the ability to receive feedback. All you have to do is post. Hey, Mark, this is what I saw. This is what I did. Can you give me some feedback? So what I ask of you is, if you post in my room, describe momentum, path, and entry. Tell me what you saw. Let's make sure you're reading it correctly. Describe direction, room to targets, pull back to areas. Go through it. Really talk about it. Show me a picture, Papa. I don't look at colors. Ha. How's that for a 2020 woke ideology? I don't look at colors. My colors mean nothing to me. And I'll show you what I mean. When we get into the second hour, I'll show you exactly what I mean, Papa. Cool? When you guys post, tell me what you see. I'll make sure that you see it correctly. You'll get that private session. So you have rules, unlimited feedback. You have a plan. You have a place to study your plan, to look at previous trades, to learn the rules. Guys, the only thing Nexgen doesn't provide is the experience, is the time in the saddle. The only thing I can't give you is the desire to actually do the work. But I will tell you, and I say this in no uncertain terms and with zero hesitation, if you do the work, if you take pictures, if you present in the room, if you keep it simple, you are more likely to find success than you're not. The only thing that will ever prove to be difficult, the patterns are not difficult, will be sitting on your hands waiting for the patterns. Amen, says Ron. So that's it. That's the gauntlets dropped. Now it's up to you. Can you wait for your rules to be met? Rob, as a new guy, you're going to have TV and NinjaTrader set up on your screens? If you want to. I think that's too much information personally. And the rules aren't the same for both, and the bars don't look the same for both. That's pretty confusing. And then Papa, We're going to discuss colors, but I want you to see. Green and red, they will change over and over throughout the day, Papa. So what we're going to do is we're going to look at how price reacts to them to make those decisions. So when I come back, guys, the lesson is going to be, excuse me. When I come back, Papa, our lesson is going to be this one right here. Is that area support or resistance with absolutely no concern to the color? I think colors form opinions, personally, which is why there aren't background colors on the large chart, which is why there aren't really traditional colors to the triggers. So, um, excuse me. I am so sorry, guys. So we're going to come back and do that lesson, Papa. That'll be the first thing we do when we get back, and then we'll look at the charts that are posted. Guys, go stretch your legs. I'm going to go have a throat lozenge. I'll be back in about 5 minutes, and we will get the rest of the day going. So back in 5, my friends. To be breathing your ear. I apologize. I'm going to click on all the links that were presented. Some of them are from yesterday. Some of them, most of them are from this morning. Some of them are trades. Some of them are observations. Some of them are winners. Some of them are losers. But there are plenty, which I love. So as we go through and we look at these charts, guys, and we talk about it, one of the things that I want you to avoid is being the trade police. It's not your job to judge anybody's trades. It's not my job to judge anybody's trades. What my job is to look at what's presented in the room, to go back to momentum, path, and entry, and to give you the best possible feedback that I know how to give. So hopefully you can move forward each and every day, become just a little bit better as a day trader. So we're going to start. Oh, and Cab, this is, that's the one we saw earlier. Here we go. All right, 15 minutes. We're at the time of entry at the gate phase of going short. I don't know that term, but what Paul is saying is that it looked like the small triggers were going to go down. So you trading view people, have you fallen for that one where you're like, man, the triggers are rolling, they're down, I can't wait to go short, life is good, and then for some reason they just go up. And you're like, holy crap, that stinks. We've all done it. I think most of us have. So I put this together, guys. I don't have hard and fast rules for this. Look, if my triggers look like they just turned down, they won't be officially down until whatever bar's going on is finished printing. And you can see right here at the bottom, they were probably threatening to go down here as well, but they ended up staying up. Paul, you took the perfect look if they were going to go down. And if they had, you would have looked like a rock star for catching this trade. But because the market decided to go up, even more so with that odds favorable momentum, those triggers never actually gave Paul a roll. And that's one of those things. A lot happens in 15 minutes. So I think a good rule of thumb is if those triggers are in that let's make a decision phase, it's okay to make sure that you're not fighting anything on the small chart. And again, I don't have a hard and fast rule on this one. And shorts made all the sense in the world, Paul. They just wanted to go up more. So the management's right, the stops are right, the entry's perfect, everything. It just didn't go down. If it had, it would have been down for days, right? And that's what I do. If I don't know if it's going to be up or down, Paul, I simply do nothing. And I just wait. It's only 15 minutes, right? It's only 15 minutes. And Papa, let me answer your question before we get any further. Papa, you were asking about the colors on TradingView. Green for up, red is down. And this is a great example of how it doesn't really matter. So I'm just going to take a picture of it. We'll do it this way. And let me know if this makes sense, Papa. When the market is coming up and it hits an area, no matter what color the area is, it could be bright pink. That's an area of resistance. Is everybody good with that? TradingView peeps, talk to me. We're good, right? And look at the bounce, right? And it happens. When you get a full body, Papa, like two corners away from the area, that's price breaking above, resistance becomes support. No matter what color it is, it's now behaving as support. And you can see that it did just that. And it remains support until we get the break below. So one of the things that you'll get on these zones, Papa, is they may change in the moment. They may go from green to red or red to green, but if you use that recipe, there it is right there, breakthrough. Good timing, Trina. This was resistance. The breakthrough makes it support, and Trina trades from it as support. Good timing, Trina. Thank you. I owe you one. And then stopped out for a huge loss. Really should have risked this much. 38, 42. Yeah, that's a big zone. 1200. Cool. Hit your first target but didn't fill. Trina, that's my get to break even no matter what. If it hits my target and doesn't fill, that's my get to break even no matter what. Good stuff. Papa, did that lesson make sense? And it'll probably represent itself a few times today. But that's a little safeguard as you're a brand new user of whether the area that you're looking at is behaving as support or whether it's behaving as resistance. All right, the counter trend, white bar, really shouldn't work trade. Not a sanctioned, dang it, Ron. Not a sanctioned Nexgen trade. Learning the high probability trend trade taught me to read indicators well enough to see these trades. Thanks again, Mark. You're welcome, Ron. So Ron starts with a termination condition on the big chart. You guys that like to go counter trend, when you're doing it from the middle of nowhere, you're more likely to get run over. But these areas are solid, right? And you'll find a way. And that's what Ron did. Ron says, I've got Fibonacci resistance on a large chart. I can't go long. I'm starting to see multiple losses of momentum. I definitely can't go long. You know what? I'm going to get in below the small triggers because it typically closes the gap to that reversal bar marker. And it's a quick profits. Quick profits. Very nice. And guys, this is kind of what you can do. And if you're brand new with me, I want you to recognize that there's a lot of people doing a lot of cool stuff. And not all of it is high probability. But it all revolves around very, very basic concepts. Was there a termination condition? Is there room to targets? Do I have something pushing it? Joel said, I need a little feedback. Is this a high probability trend trade? And Joel, the answer was no. It's not a high probability trend trade. I'm going to show you why. There was no separation between the triggers. If you can mark no on any of these, Joel, it's not a high probability trend trade. Does that make sense, everybody? It doesn't mean it's not a trade. It just means that I'm not going to call it a high probability trade, which means I'm not going to manage it like a high probability trade. One of my advantages is gone. I'm going to manage it like a medium probability trade. I'm going to manage it a little more assertively. I'm going to be willing to get paid. I'm going to be willing to go to break even. And guys, when you speak in terms of advantages, it tells you when it's time to put your management hat on. So, not the best momentum. Can't be high probability. Only 3 of 4 triggers are through. It's not even a clear path. Can't be high probability. But what is it, Joel? It is a termination that reversed the market. That's awesome. It's the tail end of momentum. It's that I've been with Nexgen for a while, and I realize that that's still pretty good. And it's the lowest risk entry you could ever hope for. And this is a take and manage. And you're going to see a lot of Nexgen users taking these trades. So one of the things that I'll do in this room, guys, if you ask me, is it a high probability trend trade? This checklist will tell you. If there's a no on any of these, you're going to have to manage that trade a little more assertively. That's it. Great trade, Joel. All right, a lot of chart reading. Triggers down, room to trouble, pull back to the area, no room on entry. And Jen chose to stay out of the market. Jen said, I don't have room to make money on this trade. I choose not to take it. Never got a full bar. The area is not broken. Looks like it kept you out of some shenanigans, Jen. Oh my goodness. Look at that. Had you taken that trade, that would have been an avoidable loss. And guys, you don't have to take trades to get smart. Talk about what you see. Talk about what's going wrong. Wait for the reaction. Reinforce your lessons. And what you'll find is that when you're really following rules, guys, more often than not, your rules keep you out of trouble. Same thing. There's your pullback. There's your close below. No room to the zone. And up it goes. Now, Jen, are you with me in here? Papa, I told you this lesson would come back. Price reaches the area. It's resistance. Yes, Jen? And it behaves as such. Right to support, and support behaves as such. Back to resistance, right? Jen? Do you see the full bar above? So first it was resistance. This was support. Back to resistance. What happens with the full bar, Jen? Changes to support, doesn't it? Changes to support. What does that mean? That prairie dog is no different than that prairie dog. So, Papa, that's going back to that very basic lesson. Does that make sense, Jen? And what did it do? It bounced up, kept you out of trouble. Good job. Great pictures. I love it when you guys take pictures. And then it pulls all the way up. That's your close below. And there's just not a lot of room. Just not a lot of room. And guys, when there's not room, you don't have to hope. You don't have to wish. And I think the NASDAQ and the S&P just got stuck in a range for a while because there wasn't anywhere to go. Weak top, strong triggers, clear path, split triggers. I like this. This goes back to language and where does stops go. Take care, Paul. Good stuff today, man. So Jen's trade, or Jen's rules say sell a pullback at an area inside of triggers. That's her trigger range. That's a lot, right? Stop has to go up here. That's huge. Jen's got areas up here. She's got a mid band. And Jen said, I choose not to trade because when those triggers are split, my risk is huge. When the triggers are split, the market could go all the way up to the very top, and then they could go down, or hell, by then, they may go back up. And she's not willing to take that trade. She's not willing to put that risk on the trade. I think this is brilliant. The further apart those large triggers are, the more risk and the less accuracy you're going to have, guys. There's some of you in the room that'll say, I'll still take the short trade, but I'll demand a reversal bar off the area inside of that zone. And at least then, I can control my risk. Jen, good stuff this morning. Trend trade short, didn't enter, not enough room, and sure enough it went. Right? But from 92 to 89, that's $60 worth of potential. And Paul just said, you know what? Not my trade. I'm cool with that. And guys, there will be more. Flat split triggers, not the best look. Gonna wait. I love it. And then Cav, termination, odds favorable, potential to break, pull back to the area inside of triggers, get paid. Nicely done, Cav. That's a good looking trend trade. Starts with momentum, has the potential to break, pulls back to an area inside of triggers. They even came back for you in case they lost you. And quick payment, right? Quick profits. It's only a medium probability trade. Why risk a lot? Why stay exposed? Cav, awesome management. Your P&L reflects it. starts with momentum, still has the potential to break. I still say getting in below instead of into is easier, but you're riding that wave, and sure enough, it works out. And it's hard to tell in his picture, but the smalls are separated from the large. He has odds favorable momentum on the small chart, pushing that market. Danny, have a good one. Thanks for being here. I hope it's not bye forever. I hope it's just for the day. Trend trade is up. The trend is up. Price is in transition. He knows how to manage. Space to the next area. And then Victor, you get in. You say you got in on the break above, right? Victor, can we play truth in advertising? If you entered on that bar, you didn't know that it was going to be a break above. You entered on that bar hoping it would be a break above, right? Because you can't confirm it until the bar finishes. And at 69 right here, that bar was nowhere close to being done. So it is a prairie dog, 100%. The way you entered, 100% prairie dog. And then it turns that resistance into support, and support holds. So good use of the lesson, and it makes it. And you said exit while good. 76, 76. And this is one of those instances where you're exhausted from watching it, right? I took the entry. I'm above support. I have an HVA. I'm almost to my target, but F it. That was too long. I got to get out. Trina, sound familiar? That's funny because that's normal, right? So, Victor, what changed, brother? When you decided to exit while it was good, the smalls were still up, the large were still up, it had broken away, you had tons of room. I guess if you're mentally exhausted, take the exit, right? It looks like it may have hit your target, but you're out at 73, so you got out right here at the top of that line, which I don't disagree with. And then they went and tapped it just to teach you a lesson, right? Just to teach you a lesson. Nice trade, Victor. Market loves to teach us lessons. All right. Triggers up. Strong-sided entry. Room to trouble. Sold one at zone. Oh, there's your pullback. Sorry, I missed one. Price breaks above. Pulls back. Closes above. Love it. Out at trouble. Outer band is a great exit. Is this you, Jen? Outer band on a trend trade is a great exit. It really is. But you were going to go for the runner, so you just put it behind the zone and said, hey, they might run. Look at that trigger look. They're going to have to work to come get me. I love that. Giving it a chance. There's nothing worse than giving it a chance, right? And then it doesn't. And Jen, I don't tell people what to do. You know that by now. For the average mortal watching Ninja Trader and TradingView, taking this platform and this platform and saying, you know what? I'm going to make decisions on 4 different bar types, 4 different time frames, 75 different areas, varying trigger locations, right? And I'm going to use that to make decisions. And there's not a lot of people that can pull it off, Jen. There's really not. My brother can. My brother will add 2 more charts just to do it. I've tried it, and for me personally, and this is just me sharing my experience because I've messed everything up 1,000 ways. I think most people will lean on whichever chart keeps them active. So if TradingView is trading directly into 173 termination conditions, but NinjaTrader appears to be open, most of us will still take the trade. If the triggers are up on TradingView, but NinjaTrader looks like a short opportunity, most of us will take the short. And it's just because we want to be active. So do what works for you. Ask yourself, how often does it work out? How often do I talk myself out of good stuff? And then make that decision. Let's see, weak bottom. All the triggers through, market reverse, triggers rolled, up and separated. Odds favorable momentum. 3 triggers through at entry. You may have had 4 at the time of your entry. Because that was the entry, pull back to the area inside of triggers. That was the man with all that momentum. I have a good idea of where it's going. I'm just going to get in on the way up, see if we can't make a little money. That's got to be Pete. Nice trade, Pete. And this is kind of a cool thing too, guys. I'm going to show you why when you annotate the trade. Annotate the trade. Don't give a dissertation on the 73 things that happened before your trade. Because Pete's talking about 3 triggers through at the time of entry. That's like right here. By the time Pete jumps into that trade, it's clear sailing. Focus on the now. Good stuff, Pete. Great trade. Miss Trina, triggers are down. Strong side. Room to trouble. 7-4. So you're below the mid band. You're above the VWAP. You do have strong triggers. You're in at 081. So you jumped in before it ever broke, hoping it would go. And it did. Good stuff. I'm glad it broke for you, Trina. Because at 081, you're directly into a mid-band as well. But you did have momentum, for sure. Directly into outer bands, didn't let the area break, directly into a mid-band, right? But relying on momentum to push. Man, Caleb, were you not in here for the last 5 minutes? We just covered that. Looking for the same trade in different screens. How could you have the same trade if it's different bar structure? How could you have the same trade if it's different time frames? Now, Caleb, if you said, can I pull both up and wait for them to agree unanimously and use that as an edge? I would say, yeah, for sure. But most of us will form opinions on whatever gets us into the trade. Right on, Trina. Down, weak side. After entry, I realized I should have entered off the VWAP. I'm not sure the VWAP is an area for entry, is it, Trina? Oh, shouldn't have entered off the VWAP. Yep. So not from an area. And they pushed up looking for the area, didn't they? That's a good lesson, Trina. I took that one on the chin about 10 times. Caleb, did that make sense? If you can avoid, not yet, Justin, we're close. If you can avoid the temptation of leaning on one platform over the other and not create some bastard love child of your rules, knock it out. John Novak does a great job of it. I can't do it. It's me. That's me personally. I'm not trying to project. I can't do it. I will always lean on the chart that keeps me active. And I find that when I have rough days, it's because I did just that. That's a great lesson, guys. It's pull back to an area. Make sure you know what your areas are. Great lesson there, Trina. I had to learn that one the hard way. When we were writing this plan, um, initially it was very much close on the correct side of the triggers. And then it was because I kept getting run over like that. I was like, we got to get to something bouncy. So you just got to learn the kind of the same lesson that I got to learn. Down-ish. Strong, room to trouble. Close below. Entry stopped out. Just didn't go. That's a good look, Trina. It's a good look. If you are going to take this trade, you took it perfect. And were you here for the lesson on when it's in that I think it's going to go down stage? You won't know for sure 100% until that bar finishes printing. So if you're going to take it, make sure it's perfect over here. And it was. And it was. It's very similar to the trade that Paul took today with the exact same look over here. And coming from a termination, Trina, I just want to say this. When this stops the market and everything's rolling, your short makes perfect sense. It really does. Up, transition, room to trouble, breaks away, pulls back, close above, missed the entry. I got it. So you took it on the way back down and they just got you. Decided to get on the pullback for better entry. I don't know. I think that you had everything you needed, Trina, for the trend trade, right? You had room. It didn't reach a target. You pulled back. You closed above. And you just said, I'm just going to get a better price. I know where my stop goes. I don't think this is a horrible decision. One of the things that I like to do, and where did you get in at? 70.50? And you got in right at the pullback to the small triggers. I think you did that beautifully. I think that was a great second chance on a trade that just didn't work. Remember that sometimes they don't work. Sometimes you do everything right and the trade doesn't work. And when that happens, go back to your rules. Did I follow the rules? And I think more importantly, Trina, and watch this. Expectations. From this entry right here, my expectation is that it's going to go to 82. My expectation is that this perfect entry is going up here, right? It just makes sense. My stop is where the market shouldn't go. Everything is up. I've cleared trouble. I've got room to trouble. It's the perfect trend trade. That yellow arrow is the expectation of the perfect trend trade. Some jerk face with more money than us pushed it down before it got there. That's all it is. So you're right. Try not to break the rules. You followed the rules perfectly. You just caught it mid-trade. Stop made sense. Everything good. Just didn't work. And I think yesterday I posted that picture, or maybe it was this morning. Let me show you, Trina. And the rest of you can look if you want, but this is a moment between me and Trina. No, I'm just kidding. Everybody look. Where was it? That's not it. I'm going to find the picture from this morning. I take a lot of trades. Nope, that's a short. I think this was it. Okay. So Trina, here's the first one. Down, room to targets, weak side, pull back to the area, close below. Can we defend this one in a court of law, Trina? What do you think? Guys in the room? Hell yeah, that's a good looking trade, right? Hold on. Where's the second one? I got smoked. So a loss doesn't make it the wrong trade, right? It doesn't necessarily mean that you did something wrong. Trina, it's the right trade that didn't work. And I think language is important. And I don't know if I've mentioned that. Loss, failure, right? Didn't work. So why did you say but, Boaz? Why did you say but? Are you telling me that I can't take short trades from the weak side of the triggers? Who cares? As long as they're down. Boaz, this is a 15-minute chart. Look at this. Weak side, transition, tons of strong, all inside of one bar. I'm on the weak side. That's why I got paid right here. But this is common, Boaz, and I'm glad that you said that. The weak side of the triggers is where reversals tend to happen, right? But because these are so slow, as long as my trend is down, I choose to go down with it. That way I'm taking a trend trade. And Trina, there's the one that I got annihilated on. Somebody with more money wanted it to go higher. I just got it higher, got all my money back. But so Boaz, from the weak side or the strong side, there's still opportunity. It's just a great way to know how to manage your trade. I had a buddy of mine tell me that. He goes, well, I don't want to take it from the weak side. It's not as likely to win. And that's just not true. It just means you have to manage it a little more assertively. Triggers up, strong side, breaks, pulls back. You're in at 42.8. That's a big bar, right, Trina? In at 42.8. Would it have been better to just go ahead and take it at the area like the momentum trade says? That's pretty significant. That is $280 per contract away from the origination. So the momentum trade makes it great entries create manageable trades. And it just never, I mean, it looks like it came back and hit it again. Still had momentum. And then here it hit it again with the triggers down. Might have been a good exit, but at that point we're so committed. This would qualify. Would have been way less. This would qualify, Trina, as I want to take a momentum trade, but I don't want to commit to that because what if it loses? Right? And it's just barely breaking. So 41.7 is right here. And you said, well, if it peeks its head, it's got to go. Right? I don't agree with that. It gives you one tick of wiggle room. That's it. You're just hoping it goes. And it didn't. And that was a pretty good loser. Good lesson. Good lesson. Great entries reduce risk for sure. All right, let's see. I think we may have a couple more. We sure do. Papa Grigio. Miss Jen. Boaz. Miss Trina again. All right, Papa Grigio. Triggers down. Room to trouble. Pull back to resistance. Closes below. It actually closes directly into. You jump in below. Looks like you're able to make a lot of money on the way down. Nice trade, Papa. Trading into support, you're hoping support breaks. Does that make sense? That would be the only thing that I ask. This is without a doubt support, and where you entered is no different than either of these tails. It just chose to go down. So calculated risk, right? Take and manage. Guys, that's 90% of trading. Take and manage. Take and manage. Jen, down, strong side. The zone was not here. Breaks through, pulls back. You're in at 92.75 and tucked right up against it. I love it. And down it goes. Nice momentum trade, Jen. Nice momentum trade. The zone wasn't here, but it sure was it over here. I mean, it's good. Solid entry, low risk, room to trouble. Momentum down, 3 triggers through. There was your pullback to the area inside of triggers. You get in on the reversal bar. Down it comes. You pop out the first contract. I love it. Rules are still met for a trade. Boaz doesn't panic. Holds that contract down. Beautiful trade, Boaz. What a great looking trade. Do I hold it or do I not? Oh, crap. That's just the perfect trend trade. I'm going to put my stop where the market shouldn't go. Enjoy the ride. Nicely done. That is knowing your rules, ladies and gentlemen. That is knowing exactly where the market should not go. I like that one. All right, Miss Trina. Trend trade. Strong down. Room to trouble. Pull back to the area. I'm assuming, why don't you want to show me this? Close below, directly into trouble, right? You're okay. Directly into one-to-ones. So you jump in on the way down at 25. You are in $500 lower than the close below. Does that make it better? Okay. How much risk did you have up top? Because doesn't your stop have to go above the pivot? So what did you do? You added $500 of risk to this trade, right? I'm not saying it's too risky. Is it less risky to just go ahead and trade into the area and manage it than it is to put an extra $1,000 risk on the trade? You don't know? Well, that's a question you're going to have to answer. Or the other question that you're going to have to answer, Miss Trina, is, and I think that was the trade maybe. This was it. If I'm going to take this trade, and you knew you were going to take the trade, right? You were sold on it. You just wanted it to be down here. Why not this one at $26.5, $100 better? Why not just take this one at $28.2 and hope for the best? Or you take this one at 30 because your risk, and I don't know if you put your stop in the right spot, your risk from here where you jumped in to up here was over $1,100 per contract. Right here, it's about $400 per contract with time to manage. Does that make sense? And this is just a management idea. I'm not saying trade into trouble, Trina. So let's do this. You ready? You're going to love this. Down, strong, room. Pull back to area. Close below. Shit. No room. Oh, wait. Now make sure that you swear. And if you're not comfortable with that, I'll do it for you. Send me a message. But 90%, right? 90%. And Trina, we've seen some really big losers. $1,200 losers, right? How do you feel when you take a $1,200 loser? Because you jump in late. Sucks. That entry, Trina, and excuse me, I'm glad you did that. That entry is that entry. That's the same one with tons of risk, huge loss, right? It's the exact same trade. So these are the things that as we grow a little bit, right? You make all of these mistakes. Not you, Trina, me, everybody in this room. And then we just talk about them. And we're like, oh, yeah, he was dreamy, but he kicked my dog. And your friend's like, oh my God, that was totally a red flag, Trina. And you're like, oh my gosh, that was a red flag, but the last three dudes did it. And then your friend finally says, don't date a dog kicker, Trina. And then you kick the habit. That's kind of what the conversations are, right? That's what the conversations are. They give us the ability to to not just sweep mistakes under the rug. And this is gold for me, which is why I'm such a big fan of it. Because I make mistakes, and when I first started, just full transparency, when I first started, I would trade directly into a termination condition. And if I didn't post my trade in the room, if I didn't get corrective feedback, it didn't exist. I forgot about it by tomorrow. True story. And it wasn't until I started posting in the room, and my gosh, this is exactly what I would do. I would post this in the room, and I would take this trade right here. And I wouldn't annotate rules. I would say must be the 20%, right? Because I'm freaking perfect. Of course it was the 20%. It had to be the perfect trade. Have you guys met me? Freaking phenomenal. And then my brother would say, all right, Mark, you see that line right there? So when price gets to that line, we're going to look at where the triggers are. And even if you have all this momentum, if price reaches that line, you're more likely to lose this trade. So, and I was like, okay, but he didn't just say you traded into a termination, dummy. He said, here is something to think about next time you take a trade. And I still remember this conversation. Did price reach a line? And if it did, where are your triggers? And John Novak got me in the habit of saying that. Every time I looked for a trade, I would literally say out loud, price didn't reach a line. Kick ass. Now I have a fighting chance. I've got all the momentum. Awesome. And I'd start talking through my rules. And I would say something clever like, if the market will simply pull back to an area inside of triggers, dag nabbit, I have the best looking trade I could ever take as a Nexgen user. And I had to remember that if price reaches 61.43, then it becomes the termination condition, and I'm obligated to sit on my hands and do nothing. So Trina, I can't tell you how much I appreciate the conversations that we have, and your willingness to have them, because it's hard. I avoided them for months, and it cost me $5,000 because I had no idea what I was doing. Sit down and trade syndrome. Small momentum, light triggers. Oh, thank you. What's light triggers? They're not heavy? That's a made-up term. So not strong. So let's say weak. Weak paints a better picture. So, and we've all done it, right? Sit down and trade. Sit down. Oh crap, it's going without me. I'm going to jump in. And of course, that's when your coffee kicks in and you double tap. So, can't take momentum without a can't take a momentum trade without momentum. Can't just jump the fudge in, right? And it's just, it happens, Z Robot. I would say that trade hasn't had as good a chance of going up as it did going down. But because it's not a trend trade entry, trend trade management doesn't make sense. Does that make sense? So let's turn it into that lesson. Why do we name our trades? Because if I take a pullback to the area inside of triggers, this stop makes sense. But if I just jump the fudge in, hoping some form of momentum carries it, that down bar right there, that's my loss of momentum. And that completely changes the dynamic of your loss. Yeah, we've all been there. We've all been there. But guys, this is important. Name your trades. I don't care what you name them. But when you name your trades, and yes, I wrote something out for this. Let me find it. When you name your trades and you say to yourself, I'm getting into a high probability trend trade, you're telling yourself exactly how you're going to manage that trade. And if you get into a momentum trade, you're telling yourself exactly how you're gonna manage it. And if you tell yourself you're in a high probability trade, but it's only a medium probability trade, you may miss out on some key management opportunities. So that's a good lesson in there, is if you're going to take a trade, give it a name so you know how to manage it. And it might have saved you a little bit of money in that one. Good stuff, Z-Robot. Victor, trend down, strong side, room to trouble. There's the close below. Just right into it. You guys are creating these false senses of security, right? The yellow line on your trade were the areas I was expecting a pullback to set up a trend trade down. So why didn't you take it? From 66 to 48 is 8 points where that bar closed. You had 8 points to manage. But instead, you let it reach support, and support never broke, and then you entered. Does that make sense, Victor? It never even broke, really. It just went sideways. And you said, well, from 56 to 48, that's $160 per contract, right? And your stop's up here. Price breaks resistance, pulls back to support. You get in, but there's your break below, I guess. So you're in at 39 after that break below. And you've got room. I guess it works, right? I guess it works. Down to 24. It's the second leg. It's kind of like Trina's. It's the second leg. That's your entry, though. That's the least amount of risk. It's all right. You'll get in the habit of doing that math. You know what I do, Victor, when I'm ready for a trade? I'll take my entry point just with my mouse. All right, 23.2, and I'll do that. 28.9. I'm like, okay, I got 5.5 points. I'm good. And I'll do that before I ever enter. Triggers are down, room to trouble, pull back to resistance. If I get a close at 38, I've got 19 points to get down. So you'll get better at doing that math, but this one was just about as good as that one. Good trade, though. Good looking. Good looking. All right, Aaron, let's see what's up, brother. Strong momentum. Large chart, good bottom. Triggers wide. I think I traded at a large chart term. Bought a pullback in an area inside of triggers. Rode it up. All right, so Aaron, right now, there's one very basic concept that's still escaping you. When price reaches a line, and let's do it this way. Price reaches the fib, right? when you took your trade, right there, I want you to count triggers for me. How many triggers are above the line? Each line gets a number. Do you have 1, 2, 3, or 4? Or 0, 2, 3, or 4? So we're looking up here. What's above that line? You're going to get in the habit of counting triggers. 2. All right. So 2 triggers through. And these are your options for every line, Aaron. 0 triggers through is a termination. Are you comfortable with that? If I have 2 triggers through in the moment, it's potential. If I have 3 triggers through, it's potential but better. If I have 4 triggers through, it's a clear path. I want you to memorize this. I want everyone to memorize this. So, Aaron, let's back up and look at your chart. Did you trade into a termination condition on the large chart? What do you think? There is no kind of. It's either yes or no. You either have herpes or you don't. There is no middle. You're either pregnant or you're not. Was it a termination condition? Did it fit this recipe for a termination condition? No triggers through. You're trying to throw way too many shades of gray in there. So it's not a termination. What does that mean? Oh, look, there's our trade. What that means, whoops, accidentally closed out. It means that with all of this momentum from a good bottom with the potential to break, I can take a pullback to an area inside of triggers. But I may need to manage it assertively because it's only the potential. Does that make sense, Aaron? I'm telling you guys right now, there's a couple things that you just have to memorize. Is it separation or is it not? Rule 1 met, rule 1 not met, right? Pretty black and white. Now you could come up with a million different scenarios, right? Oh, but my small triggers are strong, but my large triggers aren't super against. I know that there's no separation, but I still want to let it be black and white. Life is so much easier as a brand new user when you deal in absolutes. There's time to work outside of it. Aaron, you've got to memorize this. Everybody in the room, you've got to memorize this. No triggers, no trade. That's a termination. Nothing else in this world can ever be considered a termination on a large chart when price reaches a line. 2 triggers through is potential, but it's not the best. It's in red. 3 triggers through, looking at a breakout potential. 4 triggers through, a clear path. If you learn this very simple recipe, you can say in a half a second, I have momentum and the potential to break. I choose to take the perfect entry. If something changes along the way, I'll manage. Aaron, this is a beautiful trade. Everything about it. But I want you to know that that's not a termination, which makes it an even better trade. But I also want you to know that it's only potential, which means if nothing else, you take off your 32 flavors of kick-ass hat and put on your I may have to manage this hat. Does that make sense? Good stuff, man. What a great trade, and what awesome patience on your entry. And that is a huge step forward. Nicely done. Trade I had to exit early because of appointment, but the market told me strong, large chart momentum, medium triggers. See, again, what's a medium trigger? It's either strong or there's either separation or there's not. and there's none, right? And there's no areas inside of triggers, and it reached a termination condition. Did I read this correctly as a trend trade? Absolutely not. So I've said before, and maybe one day someone other than Miss Kathy will listen to me, because she did this and said it was amazing. Guys, take this picture and print it out and put it on your desktop. Put it on your desktop and take 3 pieces of paper. And I'm going to show you why. I'm going to show you why right now. I love these pictures, Aaron. So if a trade begins with momentum, did you have this look on your chart? Guys, what do you think? Was there separation between the small and large? And Aaron, I'm not beating you up here, but what we're doing is we're making you a better trader. Let's make sure, because that's tiny and I'm old. Not quite. No separation. Which means I'm going to take a piece of paper and I'm going to cover up momentum, because I don't have the best look. It doesn't mean there's not a trade. It means that I don't have the best look. Aaron, you had room to trouble, 100%. You had a clear path. So on your large chart, you're dealing with 50% of the advantages that make the perfect trade. Right now, if you can define the perfect entry, my friend, you can say, just like you did over here, I will take and manage that trade. Does that make sense so far, everybody? The language for entry. I will buy a pullback. I don't know where you entered. At an area inside of triggers. So rule number 3 is not met either. So I don't have the best momentum. I don't even have it on my small chart. I do have a clear path, but I can't define my entry to manage risk. So Aaron, what you took was a low probability trade. Because you didn't have an area, you didn't know where you didn't put your stop where the market shouldn't go. $25 win, that's cool, right? But what happens is if you keep it super basic, it's just not a trade, Aaron. It just doesn't qualify. I don't have rules for this. What you did is you said, oh my gosh, the market's going up. I'm going to jump in with it. I hope it hits a fib. And if that's the case, I'm going to show you an easier way to do it. You ready? Brace yourself. If you're going to make the decision to trade without an area, let the trend be established. It is. Let the sellers fight. Force them to go back in the direction of the trade. Because then, Aaron, you at least have something to put your stop behind if you're going to break your rules. Does that make sense? I'm not saying it's not a good trade. I'm not saying it's not a good read. What I'm saying is that if you just jump in and you're not really following rules, you're subject to the emotion that goes into it. But I think if you're not going to use an area, force them to go in the direction of your trade. That's your right. You are the only one in control. Bounced off double fib. Triggers are up. Larger trying. Pull back to an area inside of triggers. Manage quickly. I like it. Nice job. So that was a pretty good winner. That's from yesterday. Good stuff, man. You mistimed the trade. Okay, so I'm going to do it again. You guys are going to believe me one day. Aaron, how could the trade? With a little bit of study, there is absolutely no option for you anywhere other than right there. Does that make sense? If you learn this phrase, there was absolutely no option other than that spot. Rule number 3, called your entry, brother. 100%. So, little adherence, guys. Really focus on those rules. Let them be true or not true. Let them be black and white. But if you don't know the rules, if you're only guessing on the rules, if you have a half understanding of the rules, it's going to be difficult to follow them. It's going to be difficult to know how to manage. So one of the things that I encourage is make sure you know these like the back of your hand. Right on. So you didn't get your limit order in quick enough. That's cool, right? When did you decide you were going to take a trade? So you decided to take a trade here. All right. Remember when we said lines cause bounces? You took a trade directly into a line, and it caused a bounce, didn't it? And some crazy arbitrary stop in the middle of nowhere, you said, oh my gosh, this isn't the right trade. I'll put 3 ticks on it. How do I know? Because I've done this. I know this isn't the right trade. F it, I'll give it 3 ticks. If it runs, I look brilliant. If it doesn't, it's a small loss. And I may be wrong, but I don't think I am. Because I can't even begin to imagine why you think that's the right spot for a stop. Does that make sense, Aaron? If you're going to jump the fudge in, don't jump into a brick wall. It rarely works out. Triggers down, room to targets, pull back to the area, same trade. That was your first one, plenty of room. That was your second continuation entry, plenty of room, and you made it. Victor, Papa Grigio's following you, bud. I like how it lines up with the small triggers right there. Nice stuff, Papa. All right, one more. One trigger through, that's a termination. 2 divergences, that's a red flag. No reason to take a trade, right, Jen? Just hope at that point. Just hope. Good stuff, guys. All right, I'm going to take just a minute. My dog's ringing the bell. She's got to go unload. I'll be back in just a minute. I love it. Keep doing it, Jen. Keep doing it. And look at that. Looks to me like you dodged a bullet. All right, guys. I'll be back in a few minutes. Go stretch your legs when I get back. The class is yours. We've made it through all the pictures. We've answered all the questions. Let me know what you want to talk about. I'll see you in 5. What do you say? Jen said, oh, here we go. Aaron, clear path termination or potential? What do you guys think? Everybody play, not just Aaron. Current chart. Is it a termination on the large chart? Is it the potential to break on the large chart, or is it a clear path on the large chart? Large chart potential. Thanks, Jen. All right, so let's go through. Hold on. Do I have momentum on the large chart, guys? What do you think? I'm going to tell you right now, if you play along, you will be a better trader. Pete, what do you mean no? Separation between the small and large, space between. Don't get ahead of yourself, Pete. We're only talking about momentum. So everybody, yes, it's a resounding yes, right? I know you were. And we already said, Jen said, it's not a clear path, it's only potential. Is there an area inside of triggers, guys? What do you think? Here's my triggers. Whoops, hold on. Here's my triggers. There's areas in that range, aren't there? Massive. So there are areas inside of triggers. There's fibs, there's another fib, there's a mid band, and they're in that range the whole time, aren't they? So if I'm being just black and white, I also have an entry area. This is your chart read, guys. This is what you just laid down in front of you to make you understand whether or not you want to take this trade. All right, so here's where it gets important when we talk about the 50-50. Momentum is what it takes to break areas. We only have the potential because of that momentum. We can define an entry if we choose to take it. Anywhere in here qualifies. And if I take that trade, my stop has to go down here, right? Hey, what's going on, John? So let's go through this. What is divergence? Divergence is a loss of momentum, right? Sure is, Mark. You're right, it is, guys. So I could say, uh-oh, this trade's losing momentum. And then if I see a second divergence, I have to say, egads and little fishes, I'm losing more momentum. And then I see another divergence, and I'm like, son of a rock, blah. 3 divergences in the same price range is a freaking termination condition. I'm losing all the momentum that I'm relying on to break this area. I'm losing my edge. Maybe I'm not going to put all my eggs in one basket on just the entry area. Does that make sense, guys? We go back to the very basic read, momentum path and entry, and then from that read, as somebody who's learning to read their indicators, we can make good decisions. And if they break, just may not be your trade, not yet. And now here comes the continuation, maybe, that says this one, how much could you get chopped up? But now I've got momentum, and now I've got 3 triggers through. And I still have an area inside of triggers, but now all of my indicators agree, right? Now everything is beyond the decision-making point, and I've got such a better shot. And it's all coming together, right? And no divergence yet, so 3 triggers through. You got chopped in there, Justin? And if I get an entry, I know where my stop goes. Do you see how it becomes avoidable a little bit when you stop looking for the profits and you lean on those advantages? It's not obvious to the new user. It shouldn't be. It takes time. It takes repetition. It takes saying, okay, I'm losing momentum. And it might break, and it could break, and there's the potential for it to break, but it's still not broken. That is a lot of momentum, but my path still isn't clear. I can define my entry, but it's not high probability. Whoops, I didn't have an ATM strategy. We'll put a stop in where the market shouldn't go. 0225, I don't know, we'll just put targets in up here. But guys, let's see if patience pays off. If we get a reversal bar in the direction of the trade, we'll take profits. Our entry is so good that our $100 profit is before we ever get a reversal bar. Our risk is defined. Our entry is defined. Our momentum is defined. Our path is defined. All we have to do is decide whether or not it fits the bill for a trade. Does that make sense? Doesn't guarantee a winner, guys. We know there's a fight going on here, but now we at least have a fighting chance. We've got strong triggers on the small chart. We've got strong triggers on the large chart. We got 3 out of 4 triggers through. We've got areas inside of triggers. We got stops where the market shouldn't go. We've got profit targets in place. And now it's just up to the large crowd. Did they come to play today? And it's 11:19, which means crude oil typically slows down. But we're going to ride this one to the end, guys. Are there any questions? Any questions? Yeah, Justin. I think we've all done that where we try to go long, and then when we get stopped out, we figured it has to be short, so we go short, and then when that gets stopped out, we go long again. All the while, just a total abandonment of rules. We've all done it. Aaron, it could be me, man. Um, when did you adjust it? Like just now? A week ago? Oh, here comes John Novak. He's about to say some smart stuff. There you go. Aaron, sync your clock, clean your data, and then you should be good, John says. He is the guru. And if you need any help with that, remember, Jason is in tech. You bet. Who's exhausted from waiting and doesn't want to wait anymore and just wants to get out of the trade because it's too overwhelming? Anybody? We're still pretty good, right? So what's changed since entry? We still have strong triggers. We're still working with that path. We'll put those on there. We still have the perfect entry. Smalls are still above the large. Stop is still where the market shouldn't go. Nothing's really changed, right? What's the change we want? Let's get that first target hit. Let's learn how to get paid. It's a small target, guys. It's a $100 target. That's it. Maybe, Pete. Unless it crashes down, then it won't ever. But that is the best look if you're not going to have a clear path. You can sit in this trade for hours, crude oil at this time. The key is, can you defend it in a court of law? Is this the rules met? Is that the right entry? Does the stop make sense? Are the advantages in play? We're still in the retracement range. We're still at areas inside of triggers. I refuse to panic. If they want me, they're going to have to come get me. If they want my money, they're going to have to push beyond the retracement zone. They're going to have to push beyond the areas inside of triggers. they're going to have to go to where the market shouldn't go. So I do nothing. And I'm calm and I don't care. I don't know if it's going to be a winner or loser. Sorry, Wayne, you are 8 minutes late, bud. It's a lot of support, right, Pete? I'm scrolling up, Wayne. I got you. Maybe. All right. Trend up. Room to targets. Strong side. Prairie dog above. There's the real pullback for a momentum trade. Out of trouble. Nicely done. So, Wayne, here's the question. You ready? Why didn't you get paid at trouble here? Why did you wait for it to retrace all the way back and almost take you out and then get paid at trouble? Trading directly into areas. Momentum trade that you don't see the entry. Doesn't have momentum. Is it really a momentum trade, Wayne? There is no momentum. It's I hope it goes up from down here, and it did. Good job. And then it has momentum, and that's the effortless one. Oh, it looks like we lost our crude trade. And then, Wayne, there's nothing on this one. Let me see if it'll reload. There it is. Trading inside of the zone. Needs to break the zone before any longs. I like it. I like it. Where's the bottom of your zone? 610, 610. Good recognition, Wayne. Place that could stop the market. And that's the same look. Like, that's your look. But because there's no clear path, you choose to sit on your hands. I like it. Look at that. Oh, that's the NASDAQ. That's crude oil. Oh, it was the S&P, wasn't it? And look at that. We lost. Momentum, potential to break. We got run over. Bummer. Happens. We gave it the best chance. Gave it the best chance. Guys, what do you want to talk about? What's on your mind? What can I help with? What's going to make you happy? What's going to make you a better trader? Did you guys know? Hold on. Wait a minute. Whoa, they want to go down, don't they? All you cool kids with the Instagrams, I want to show you something. $100,000. Man, I got a little yuck, Wayne, for sure. I feel great. Feel great. But I've definitely got some congestion-y stuff. Guys, Nexgen is giving away 5 $100,000 evaluations. You have to follow on Instagram and X, right? Is that and or? Can it be and or? I think it's and or. Tag a trader buddy in the comments section. Guys, you can tag me, go tag your friends. Repost, and you're entered for a $100,000 account. Guys, that's not a lot of work to make that happen. I want to show you something, though. If I win a free account, my cost of the account is nothing. If I pay the activation fee, if I pass it, Nexgen's going to credit that back. My activation fee is ultimately nothing. If I get to my first payout on that $100,000 account, hold on, what's the... I want to make sure that I know the right one. Payouts. On a $100,000 account, $27.50 every 8 trading days. So if I get to my first payout, it's a free $27.50. If I get to my second payout, it's a free $5,500. If I get to my third payout, it's a free $82.50. So on and so forth. Guys, all you have to do is follow, comment, and share. That's it. And it's assuming you trade well, it's free money. Nope. GWC, no matter how many times you ask, it's not on NinjaTrader, man. I'm sorry. Why not? It's a free account, right? My chart's missing a fib. I don't doubt it. Here, let me reload. Boaz, thank you for that. Guys, I do a lot of changes on my charts. I do a lot of putting stuff on, taking stuff off, building different things, creating different things. And sometimes I lose information. One of the reasons it's so important to trade your charts, not my charts. That fib would have been helpful, right, Boaz? Well, it didn't show up. Not yet. We'll see if it does. We'll see if it shows up. I don't even know if I have tick data running on this one. Ooh, that sounds good, Pete. All right, so Boaz, I do have tick replay on. 02, 02. That's a very different look, even with this right here. It's a very different look. It's still not right. So I'll probably go through and rebuild. Guys, if you ever feel like your charts aren't right, build a new chart. Why not, right? Doesn't cost anything. Couple moments of your day. So we'll see if this one that I'm building now gives us what we need. That does sound better than a reheat chicken sandwich, without a doubt. Pete wins the lunch battle. Actually, he may not. So I'm in Georgia now. Check it out, Boaz. Oh, that's the one, right? Very different look. It did come in when I reloaded. Awesome. I'm in Georgia. And in Georgia, they have crystals. And crystals is wannabe White Castle, and they're horrible. But they are amazing. So there will be a day when I go get crystals. Yeah, based on that one, well, it was 2 triggers through, Aaron. The potential to break. So probably not with 2, because my KISS plan, my personal plan, my plan that's designed to teach me to read indicators, had a couple of problems with it. And watch this. This is avoidable losses. If I take that checklist and we put it on this trade, Aaron, now I want you to see this. This is pretty cool. Is 3 out of 4 triggers through the area? Guys, can you tell? It's only 2, right? That alone disqualifies me from this trade. It's not from a strong bottom. That disqualifies me from the trade. Kind of crazy, right? That one little checklist keeps you out. That one little checklist. Once a month. I can't do it once a month, Victor. I don't really eat gluten, so it's already going to bloat me out. But it'll be worth it. I do it with the McRib too. I missed it this year though. Never got one. I do love a McRib. And guys, now we're just caught between terminations. Oh, awesome. Thank you. First day trading, the pro funded, Justin, up 2,100. That's what I'm talking about. Now just do that every day for the rest of your life. Semi-life or evaluation. Either way, that's awesome. Nice. Nice. Just do it every day. That's it. Remember, you do have the 30% consistency rule. So you're going to have to match that 2,100 or get it close. I've seen people do that, have big windfall days, and then request their payout. And we have to, unfortunately, take them back to the rules and say, hey, the rules say, Victor, I see the message. I've got the manual version of that, the sinus rinse, and I do that when I'm struggling with these. My wife had a little virus, had the exact same thing, and it was something contagious because I ended up with it. But I do that rinse. Is it? I may have to look into that. Does it use suction or something? I have to give that a go. Not to gross out the rest of the room, huh? Oh, right on. All right, here's my NASDAQ. My NASDAQ says up. And my NASDAQ has room to trouble. And my NASDAQ actually had a pullback to an... Oh, that was on the wrong side. So we're waiting for a pullback to an area. And that pullback really needs to be above that line. So guys, we're going to call our shot. That's where we want to see it. Are they going to come get us? I don't know. I don't know. But until they come down here, I don't have anything to do. I know my rules. I call my shots. But Mark, why didn't you just jump in here? Well, because that's a prairie dog. And it'll work sometimes, right? Lion King, that's where my rules say go long. So I'll write the rules on here, and this is pretty cool. You'll dig this, or you won't. I don't know. My small triggers are up on my 15-minute chart, my big chart. Awesome. It's good to have you here. So direction is up, which means I'm only looking for longs. Does that make sense? I'm not waiting for a pullback on the large chart. Not at all. So I'm going to change the colors. What I see and what it means to me. So the next one. Whoops. Rule number 1 for the trend trade is room to targets. So Lion King, room to targets means that for wherever this market is right now in the moment, I have to have room before I smack into something. I've got 29 points. So that means that I have room to get paid. You guys with me so far? That's your large chart read. My small chart rules say, and I know them, so I don't even have to guess. My small chart rules say I will buy a pullback at an area with a close on the correct side of small triggers. So the one thing that I haven't had yet, no matter how much I wish I was in a trade, is the market hasn't pulled back for me. But since I know what my rules say, I know where I want it to pull back. Now, things could change. There it broke, and now it just pulled back to this area. Do you see it, Papa? So right here, that's a momentum trade. With strong triggers, pull back to the area, 941.75 is the Nexgen momentum trade. And that is, hold on, the second trade on the KISS plan. Now, if this trade fails and they decide to push down, then I have to wait for the close on the correct side of the triggers. And guys, this is what knowing your rules does for you. There is no, I hope it does this, I wish it would. I mean, you can still hope and wish, right? But this right here is the Nexgen momentum trade. And if it just keeps going up, I've already got my targets. That's the second trade on the plan that I give you guys. And it looks like this one's working pretty good. We'll see what, no. Hopium will mess you up, won't it, Lion King? Welcome to the room, man. I like that you're talking. Strong, large chart, momentum wide, room to trouble, pull back to the area inside of triggers, get in just a little bit late. Rockstar, Aaron. Rockstar. So here's the question. Potential, termination, or clear path? What do you think? You did have room to trouble, but how does that blue line fit into it? Just for the sake of lesson, what do you think? It's potential. What does that mean? If something goes sideways, I'll manage. That's it. That's all it means. Beautiful trade, Aaron. Really nicely done. They're still going up, guys. The momentum trade is still working. But now look at this. My small triggers are rolling down, which means if I'm not already in that trade, I have two choices of areas for the market to pull back to. I don't know which one it's going to be. I don't know if it's going to go to this higher one around 940, but it still gives me plenty of room. I don't know if it's going to come all the way down to 920. Hell, I don't have a crystal ball. But pop up, calling our shots, right? Because the language says, if the small triggers roll, my next trade comes from the lower area. Momentum trade's still going up. So this is only if they actually make it. If not, and you miss the momentum trade, it's just not your money. Does that make sense? But until they hit the large chart, it's still the same. That's probably target for your momentum trade. That's pretty good. That's a 20-point trade. But guys, this is the proper way to take a momentum trade. It's not the peek through. It's the pullback. That was the perfect momentum trade, and it just went everywhere we wanted it to go with that momentum. We never got the trend trade. Has nothing to do with price finishing. So check it out, Papa. You guys know that I give you plans with checklists, right? So check it out. Let's look. Let's put a checklist on there. Hold on, let me change. Oh, or area. Okay, it's right. I was like, wait a minute. All right, so here we go. There's my chart. Here's my checklist. So first, it's no terminations or zones reached on the 15-minute. You guys see it? We were all good, right? Is that a yes? Cool. Strong side of the triggers. Do you guys see how it was left of the triggers? That's your big giddy up look. That's a yes. Any pullback to an HVA line area for entry. So here it breaks. There's your pullback to the line. That's your entry. It has nothing to do. This is the only entry, Papa, where you will wait. Hold on. Get over there. Yeah. So right here, I will wait with a limit order, and my stop goes a few ticks below, and they're super low risk and they're super high momentum. And why is it such a tight risk stop? Because if that trade fails, that's typically what it does. Turns into a trend trade. Does that make sense, everybody? It is different than the pullback on a trend trade, Papa. It's way faster. It is way faster, but it goes on that same premise. So check it out. I'm going to talk through it. This is support, right? I'm sorry, this is resistance right here. Everybody's cool with that, right? As price comes into it, it's an area of resistance. And then when I get a full bar above, what does it become? It becomes support. Perfect. So this is what the momentum trade is. Excuse me, I'm so sorry to cough in y'all's ear. With nothing in the way on the big chart. From the strong side on the big chart. When the small chart breaks an area, and you guys know the recipe for breaking the area, and there is strong triggers, odds favorable momentum, best of best. That area that becomes support is likely to produce a bounce up. And that's all it is. And that's all it is. Wouldn't that 1-to-1 be a termination condition? No, that would have been a target. We were in about right here, Justin. That 1-to-1 is a target. These 1-to-1s, you haven't gotten to them. Justin, what part of the world do you live in? That's what you mean. That's a target. It's a target. You've got tons of room to get there. That would be a beautiful target. Does that make sense? Until you reach it, it's a target. Until you reach it, it's an airplane flying overhead. We're not allowed to worry about it crashing on us. So because of the look on the large chart, it is a super quick hit off support with very low risk, hoping momentum pushes it up to our target. Does that make sense, Justin? And sure enough, I mean, they launched through it. And look at this. Well, this one doesn't have the best momentum, but it breaks and it pulls back and off it goes again. So the pullback on the momentum trade is the price touching the zone, but on the trend trade, exactly, Papa. Two different entries. There's your trend trade entry. And then hold on. This is the momentum entry. Look. Price breaks, snaps back. So that's the momentum entry look. No close below the triggers. Well, Justin, the rules say, if you entered per the rules, Justin, the rules say that's your entry. The rules don't say wait till it gets down here and hope for the best. Does that make sense? That's some scary shit. But that's the entry. It's got virtually no risk. So the further you let it get away from the good entry, the more risk and the less profit potential you have. But that's your momentum trade look. And then compare it to the trend trade look where you get the big pullback, not the quick snap. And you see that one right there, Papa? There's no separation between the small and large. That's not a momentum trade. So you have to wait for the trend trade. And yes, Boaz, momentum trades can be taken from HVA lines. Great entries create manageable trades. Haha, Junior. You like to wait for confirmation that it's respecting that resistance? That's fair. Then Justin, the momentum trade may not be your trade. If you prefer confirmation, the momentum trade, it's like wasting it. It's like filet mignon well done. Yeah, you still get to tell everyone you had steak, but you didn't have the best steak, right? I was telling John Novak not long ago, Justin, I don't care for the momentum trades. I don't know why. Something about them doesn't jive with me. But they're fantastic trades when the rules are met. But I'm like you, Justin. I prefer a little confirmation. And on a momentum trade, by the time you get confirmation, if it turns into a trend trade, if the small triggers roll, it's just astronomical risk. So you either gotta commit or just avoid to have the best chances of success on it. And it never gave us the trend trade, right? And that's typically enough for you guys to turn into momentum traders. But Boaz, there it is, right? Strong triggers, pull back to the HVA. That was the second leg of the momentum. Does all that make sense, TradingView peeps? Two types of entries, momentum and trend. Very different. Trend needs the big pullback to an area. Momentum needs the snapback with everything strong. I mean, it's right there in the name, momentum trade. When they work, they are awesome. Strong side of the triggers, very important. That was momentum, pull back to the area inside of triggers. That was potential, pull back to the area inside of triggers. Losing a lot of steam, but still potential. And I think that was it, pull back to the area inside of triggers. Did I miss the picture? Are we all good? I think we got them all. Justin, I think there's trades, and this is for everybody. There's trades where confirmation makes sense. I firmly believe that. I day trade the NASDAQ. That's my market of choice on NinjaTrader. And as such, I like confirmation for my trades. I like a reversal bar in the direction of my trade before I enter. And that's just having been run over on the NASDAQ so many times, I got tired of it. If you're trading the S&P, if you're trading crude oil, nope. HVA lines are not trend trade spots, Boaz. On Trading View, they are not Trading View, or they are not. These are the areas where well, John, not on their own. Never mind, guys. It's true. I lied to you. If you're trading the KISS plan, Boaz, HVA lines are not entry spots. If you're trading the KISS plan. But the KISS plan is designed to teach you how to get in and out, to teach you how to put stops in place. And John will tell you he'll take them from an HVA all day long. Who's right? Whoever's funding the account. That's who's right. So I would say go back and look and see. How often do HVAs help? Now when they line up, it's golden, right? It's awesome. If you're John Novak, yes. If you're John Novak, an HVA line can be used for entry on a trend trade. Excuse me, I'm so sorry. If you are in the KISS plan, it's not one of the areas. But the KISS plan is designed to optimize your chances of success. It's designed to be a stepping stone. And as you learn to read your indicators, so will you see more, find more opportunity, different ways to do things. Now for me, if I get an HVA line and an area in the same spot, that's like bonus. But I like something bouncy. The KISS plan says just get accustomed to trading areas. You'll find more. All right, guys, that's it for me today. I'm going to rest my voice. Let me get